So this is just going to be a quick video, an analysis on gold and what I'm looking at for the week ahead. So obviously with America bombing Iran, that's going to have a massive impact on gold. I am bullish bias on gold, so I'm going to give two scenarios. Obviously it's 10 past 10 at the minute. The gold market doesn't open till 11, so we could be expecting a gap to the upside, but I'm going to give two scenarios for buys. First one is going to be if we don't gap to the upside, where we can look to take buys from. So if you have a look on the 15-minute here, we have this high, which was taken out. We also have this high was taken out. My bad. We also have this high taken out. So we had these two levels broke by this impulsive push to the upside. So what we can do is we can wait for price to come back to the level that broke structure. We broke bearish structure, flipped to bullish structure. Not confirmed that we're bullish yet because we need to see a break of structure, a pullback and a continuation to the upside to confirm a structure shift. This is just a break of structure, not a structure shift. So we can wait for price to come back here and then buy from this level back up to, realistically, I'm looking at gold to come right back up to this level here on the 4 hour time frame, around 3500. So this is a realistic target for gold. Maybe not this week, but I would say gold will most definitely come back to this level in the next coming weeks. So second scenario is if we have a big gap on market open, doesn't make sense to buy after markets just opened. What likely happen is we'll retrace, fill the gap. So if the market gaps, say for example we open up here and this candle goes bullish, this is your gap here. Price will likely retrace. So what we can do then is this, if you look on the hour, this would be considered a new low in the market. So if price gaps up here, let's draw a candle in just for argument's sake. Say this is a bullish candle. So this is how the market opens. We then have a new low formed, which is here. This would be a new higher low. We wait for price to pull back to this level. So we can draw a demand zone from here. Obviously, this has to break structure to the upside. So this level has to be broken in order to confirm it. We then wait for price to pull back into this level. And then we wait for an entry down here, confirmation on smaller time frames that we're rejecting this level. And we take price back up to, for a swing trade, we take price back up to around 3500 and then potentially make new all-time highs. This would be my target, and then this is obviously the overall target is all-time highs. Doesn't make sense to hold any trades through all-time highs. You'd obviously want to take profits a lot earlier, but it's still a very big move regardless. Even from here to here is a nice amount of pips. You can make a lot of money trading just from here to here. Or even as a day trade, if you wanted to take a day trade, you could take profit at these highs here. Anywhere around this level. We could draw a little supply zone from here. Even from here to here could be your trade. Could easily clear that in a day on gold. So day trade and then swing trade for those who swing trade. If you want to position trade and hold for weeks, we then have target up here, 3500.